Robinhood is democratizing IPOs. If you guys haven't heard the news, Robinhood just announced the other day that they're going to start allowing IPO access on their platform. This is huge because previously IPOs were only allowed for sophisticated investors and accredited investors at certain public institutions. Now, individuals and retail traders on Robinhood have access to IPOs just like every other investor or hedge fund or institution out there. So in this video, we're going to be going through everything you need to know about IPO access on Robinhood. So let's get into it. Before we get into the content, if this is the first time you've been on my channel, I make videos about personal finance, financial literacy, savings, investing, and I also try to throw some entrepreneurship in there as well. So if you're interested in any of those topics or you want to see more videos like this in the future, make sure you subscribe to the channel and don't forget to hit the bell to be updated anytime I post new content. Robinhood recently announced they're going to start allowing IPO access on their platform. This is huge news for all retail traders out there because it levels the playing field and allows those retail traders to start to get into that more sophisticated game. In the past, for example, if a company IPO'd at, let's say, $25, when it starts trading on the actual markets for retail traders to buy or sell, that price may have went from $25 to $50, and they never really got to see any of that upside potential. But now Robinhood is changing the game, and they're doing this by allowing IPO access directly on their platform. So we're going to be going through everything you need to know, everything they announced on their blog, and pretty much how you can get into the game and start investing in IPOs on Robinhood. Looking at Robinhood's blog post, most IPO shares typically go to institutions or wealthier investors. With IPO access, everyday investors at Robinhood will have the chance to get in at the IPO price. Now, let's get into how it works. Robinhood will allow you to discover upcoming IPOs from a list of participating companies that plan to distribute shares to Robinhood. You can also follow these companies to stay up to date on milestones and read their preliminary prospectus to learn more about the business model, management team, and risk factors. While on Robinhood's platform, you can request to buy shares of companies at their initial listing price range. When the final price is set, you'll be able to review, edit, or cancel your request before shares are allocated to Robinhood customers. After that, you watch and wait. IPO shares can be very limited, but all Robinhood customers will get an equal shot at shares regardless of order size or account value. Right now, IPO access on Robinhood is only available to a certain number of users, but before we get into more details about what that has to offer, let's talk about what an IPO is, or what an initial public offering is. An initial public offering is when a private company starts to transition into becoming a public company. There's a long process and it takes a lot of time, but essentially what happens is the private company is looking to either raise capital or pay off debt. And in order to do that, they need to go out into the retail markets and to the institutional markets and raise capital. And they do this through an IPO or an initial public offering. An initial public offering is the first time this private company is going to the public markets. And this is going to be the first time retail investors like myself or yourself are able to participate in that particular company. And now a question a lot of people ask is, why do private companies want to go public? And there are a lot of reasons. One of the main reasons is that it's just a milestone. Usually when a company is a startup, their goal is to finally become public because there's a lot of praise and there's a lot of accomplishment with becoming a public company. But getting down into the fundamentals, they do it for a couple of different main reasons, one of which is to raise capital. When a company goes from being a private company to a public company, they are selling shares and stake in that company for equity ownership, and they're selling that to institutions and retail investors. When they do that, they get all of the capital that comes in from that initial public offering. So for example, let's say a company wants to sell 1 million shares of their company, which is 5 or 10% of the company, and they're going to be raising $1 billion. That $1 billion goes directly into the company. They can then use that money to do a bunch of different things like hire more people, pay off debt, produce more products, or up their marketing budget so their name and brand name becomes a household name. It's really an opportunity for the company to raise money in order to further expand their business. And this is the main reason why a lot of companies want to go public, because as a private company, you might not have access to the same amount of capital and or resources as a company that's public, because when that public money comes in, you can disperse it and now you have access to a larger balance sheet. This process sounds amazing and all, but why doesn't every company want to go public? And there are a bunch of reasons for that as well. Going public is a tedious and long process. It's not something that you can just decide to do overnight and go public. There are a lot of processes and steps that you need to take to actually go public. One of those is actually running a successful business. Even it doesn't really have to be profitable, but it has to be able to be marketable to the masses. It could be a social media company, it could be a tech startup, anything. If it's a good idea and a lot of people like the idea as well, it could be an opportunity for your company to go public. But along that process, there are a lot of regulatory filings, accounting work, tax work, management disclosures that you need to put out in order to get to the point. And a lot of smaller companies that maybe only have 5 to 10 people don't have the resources or don't have the capital to actually go through that entire process. Going public can take millions and millions of dollars, even for the smallest companies. So it might not be the best option for a smaller company thinking about raising additional capital to go public rather than to go to the private markets and get capital, or to go to a normal traditional bank to get some debt funding. Public companies also need to put out regulatory and accounting reports on a quarterly or annual basis, or if there's a major disclosure, they have to put it out to the media immediately. Most smaller companies don't have an entire investor relations or media marketing team, or a tax and accounting team, or a legal team even, to put this information out on a timely and efficient basis. Accounting, tax, and regulatory work can cost a lot of money, and most companies just don't want to deal with the headache of putting out continual information, because public companies are required by the SEC to put this information out, like I said, on either a quarterly or annual basis. And lastly, some private companies just like to stay private because they're family owned and operated. It could be a family company that you've owned for generations and you don't feel the need to go public because only your family is in charge. And anytime you go public, you need to sell ownership stake in that particular company, either to an institution or to the public retail investors like myself. And a lot of companies say, if we retain 100% ownership in our company, it's successful, it brings in a lot of net income, and we don't have to really do a lot. It's been running for 50 years, and we don't want to do more work or hire more people or have the outside scrutiny of the media, every single week or every single quarter looking at our books and our accounting records. We just want to run our business the way we want to run it, and we don't want to bring in any outside board members or stakeholders telling us how to run our business because it's been successful. And that's what a lot of smaller, private, family-owned and operated companies do. They say, hey, yeah, it would be great to go public, but we're making a lot of money as a private company, and it does make sense for us. Now, for the companies that do want to go public, here's what they're going to need to do. They're going to need to file something called an S1. And an S1 is essentially a registration statement that goes through all of their financial records. And it pretty much gives a roadmap for all of their investors about where they started and where they are now, where they plan to be in the future. It goes through all the financial records, the management team, the board members, stakeholders in the company currently, what their projections are for the future, the products that they offer, and the products that they think they're going to be able to offer in the future when they get this capital. It's also going to explain how they're going to use the money from the IPO in the future after they've established themselves as a public company. This takes a lot of work. And after submitting this, the company needs to go on a roadshow. And a roadshow is essentially just going from bank to institution, saying why that company should host or be an underwriter of their IPO. A lot of banks love the IPO process because, like I said earlier, they can make a lot of money off of it. But for an unsuccessful IPO, there can be a lot of headache for not only the business owners and the stakeholders, but also the investment banks as well. So now that we got through all the operational stuff, what are the risks to going through and becoming a public company? There are a lot of glitz and glam about raising billions of dollars, selling millions of shares, being at the New York Stock Exchange, being in New York, and actually taking your company public and validating yourself as a company that went from a private company and a startup to a public company, a national company, and maybe even a multinational company in the future. There are a lot of risks in investing in IPOs because in the past, just looking at sheer data, there's no way to determine if a company will either go up or go down on IPO day. A lot of companies, even though they've been underwritten by the major investment banks here in the US or overseas, get an IPO price. Let's go give an example of $25. That $25 is their best estimate of what the company is valued at. More likely than not, it could be a lot above that or a lot below that, but that's just a good estimate. And now, if you are an investor in an IPO, let's say you got in at that $25 price, if it drops to $10, would you be willing and able to hold that company and take that loss? Or if it goes up to $35, would you be able to sell and, or would you want to keep holding? There are a lot of risk factors and there are a lot of volatility in the first day and the first months of an IPO. No one can ever be certain about where the price is going to go. And if they do try to tell you if a price is going to either go up or go down, you shouldn't listen to them. This sentiment holds true even for great companies. You can be an amazing company that has millions and millions of users, daily users. You bring in billions of dollars in net income, and you can still have a flop on IPO day. So if you're interested in IPOs, especially on the Robinhood platform for retail and traders, it's imperative to do your research. Read through the S1, do some research about the management company, actually use their platform or whatever company that is going public. Try to dig into their website. Do everything you can to make sure you're informed to make the best decision about whether to invest or not invest on Robinhood's IPO Access platform. But before we get out of here, I want to ask you guys a super important question. What do you guys think about the IPO process? Do you think it's too complicated? Do you think it's only for the rich or the sophisticated investors? Are you looking forward to investing in IPOs on Robinhood's IPO Access platform? Let me know in the comments, because I think this is going to start to democratize the way retail investors are able to trade. Like I said before, this is something that was only previously available to accredited investors. I'm not quite sure how they got through this process, but Robinhood is able to knock down barriers left and right, and they've been doing it for year after year. So it's going to be exciting to see what they have in terms of future enhancements to this particular option or other options and other investment vehicles in the future. But if you got some value out of this video and you want to see more videos like this in the future, make sure you drop a like on this video and subscribe to the channel, and make sure you hit that notification bell to stay updated anytime I post new content. Talk to you guys soon.